Hello and welcome to the end of day review for Friday 27 2024 and at night this is at 8:30 we do have the low to high to medium impact news, which is the PCA data, which is a subset of the PCI data, and on Thursday we have the GDP data. So let's see how that impact us. And we are in this last week of September. Maybe on Monday it start. You know, on Monday still in September, but it start a new week on October, which is the next quarter, the last quarter of the year. So very interesting to see how Monday play out. But for Friday, we have a lot of action and a lot of setup for to trade right there. So now let's dive into the charts, 15-minute charts, our favorite right there. So basically we marked out the we box out the previous day PM range and then the London range that give us a liquidity reference right there. So for Friday, we have to wait for the 9:30 candle formation. The reason could be we don't know. We still theorize. We try to build up the liquidity run model right there. So basically, the London is within the previous day range right there, and it's still below the previous day PM right there. I mean the AM. So basically, it basically is still in last range right there. You see the range right there, last range right there, the whole right there. So we would love to see the 9:30, how the 9:30, and the 9:30 they have because at 8:30 we have the BCA data, which is CPI data, come out. And it rallies, so it gives us an idea that it create the range right there. You see that range 8:30. So it tests the low of that range. It create equal low right here, and it tests 1 2. You see that at 9:30. All right, we thought that it's gonna break. It will walk the tape. We thought it's gonna break at 9:45. And we did see the setup right here. You see that break test from below. We did engage right here. We get a huge gain right here. That's type. It's called type 1 reversal. Right, break test from below. That's the type 1 reversal. So the low of this is 5809.25. 25. So we see right there. So we wait for the 9:30 formation, and then we see the setup. We have a nice trade right here, but we give back right here because we thought that it's gonna make a, you see that leg up, right? And a retracement. We thought that it's gonna make a second leg up. So that's our anticipate right there. So we thought it's gonna make a second leg up right there. That's our anticipate right there, but it did not. It go into this setup a little bit tricky right here. You see the setup right here, the reversal right here. So basically right here you have, you don't see the reversal right here clear, but look on the left, we see that that's a huge failure gap right there. It lived up from the Thursday in the AM right there. So basically you see the bearish breaker right here, which is the low right here, and the huge gap right here. Basically bearish breaker, failure gap, and this is one, it's just retest, so it's gonna be reverse right there. But we're thinking about that, but somehow we didn't take action when we saw information right there. Well, if we look into the Thursday, you remember we say about a double pulse theory, but for us, we just want to use so-called, we're gonna double rate theory. We did talk about that on the Thursday. We call it double rate theory because that's what guys say double pulse, but it's a little bit different than us. The way we understand a little bit different, so we just use our own term right here, double rate theory. Basically, it rated the liquidity twice before reversal. So look at on Thursday, you see that it rate one time, and it rate second time, then it reversal. That means that as soon as we see rate the second time, it reversal, then at the 9:30 we're going right away. We short them without wait for the 9:30 candle formation. However, on the Friday, you see the similar thing happen right here, right? It rate one time, right? In this case, it's very powerful. It rate both. It rate both the London high, which is buy side liquidity, and also the PM. That's the difference. So it rate one time, and then it rate the second time, then it's reverse. It is reverse right there. So basically, we are trying to observe right here to see us any pattern show up right here, to give us an idea that when we can wait for the 9:30 candle formation, and when we should not wait. So for the Thursday, we can see that we don't have to wait for the 9:30 formation. But for the Friday, we have to get a formation, and as soon this formation, then we can see that as soon as it break into the high, which it rate the buy side liquidity the second time, then it create a reversal right here. You see that if we look at the at a 8:30, which is the PCA data release, we don't see the pattern much. But if we mark the 9:30, and that is the critical right there. So whenever we wait for the 9:30 candle confirmation, then we can use that candle range theory in order to see the setup. The reason why we make this reversal setup, because we're so focused on the 8:30 the data release. We thought I'm going to use this range, but if we use this range, we don't see the theory. We don't see the setup. But if we use the 9:30, then we clearly see the setup right there. Break, test from above, and reverse. You see that the type 1 reversal is stronger. You see, it's very strong. It's stronger than the type 2 reversal. Let's fix this number, make it more accurate. So the high of this is 1814. Oh, 1814. Oh, come on. 1814. Yeah, so the high of this is 1814. It's a very even number. All right, there's no decimal. Yeah, if we look at 9:30, because we wait for the 9:30, then the 9:30 become our key candle range right there theory, the key reference to make decision, and it's perfect right there. We see that. I think we do have the right up for that. Let's take a look real quick. Yeah, here's the write up we have at that moment. So basically, we wait, right? This one we wait for the 9:30 right there, and the condition we have The first one, we see that the London range is in the prior day PM range, and we wait for the liquidity rate one time and wait for the second time, and it fall into the failure gap up here, then we know that it's gonna be reversed. We know it's gonna be reversed. So it rate both and it rate twice. We can add right here is the double rate theory right here on the number 2 right there. The double rate theory, rate 1, rate twice. And then we see the reversal type 1 is formation right there. And when we see the reversal type 1 and they have the test happen more than one time, then you know that it's a very strong setup from, you know, what our experience right there. Yep. Yeah, look at this. So we have a note right here also. The 9:30 candle, the top wicks, the top long wick, right? You have a top long wick right there, but not making a new high. It's not making a high. But if the 9:30 making a new high, then we know that it's gonna. If it make a new high, then we don't have to wait for 9:30. That's the point we try to make. So basically, we want to see when we need to wait for the 9:30. In this case, we wait for the 9:30 and wait for the fall breakout. You see that here? Wait for breakout at this level, which is the high right there. It's not making a new high. There's no buy side liquidity rate at the 9:30. Because the other day we see that you see right here, the 9:30, it did the difference is that right here, why don't we wait for this to break it and create for breakout? We don't have to wait. The reason why, because the 9:30 it break the buy side liquidity rate right there already. Let's do it one more time so we are on the same page. Okay, so whenever we see that, okay, because of right here, we at the 9:15, we don't see it rate. I mean, it did rate London, right? That's no secret, but it did not rate the prior day PM. Yes, so that's the reason why we had to wait for 9:30 formation. Go back to our theory right here. So basically, are we gonna wait for 9:30 candle formation, or we're gonna engage right away? So we try to build that model right there. So in this case, we're not clear. So that's the reason why we wait for the 9:30 candle formation, because there's no liquidity rate in this case. The best is we want it rate both the previous day PM, right, and the London. In this case, you know, the PM is the high right there. So we want to wait for the 9:30. Okay, when the 9:30 form like this, then the next question for us is, wow, right here, are we going to wait for this to break out this level, or we just see that it's just a liquidity rate only? It will not be create a full breakout level. The reason why, because we see that the 930 already rate them, so it's not gonna break this level. It do one more time rate only, then boom, it's gonna reverse. But in this scenario, it's different. You see that? In this level, in this setup, you see that the same thing happened right here. It did rate the London, sorry, not London, but the 930. However, we're not going to engage in here. We have to wait for the 4 breakout form at that level. The reason why we put right here, we notice there's the 930 right here. It have a long wick on the top. However, it's not making new high. Basically, it's not, no buy target rate. Then we have to wait for this level. We do not take short right here. We have to wait for that level to create a 4 breakout setup, which is exactly it happened. So that's a very key detail that when we do a deep dive, we saw that. So keep that in mind. It takes time. We're not going to get it right away, but it's worth it that we practice until it become our second nature. So we know when we need to wait for the 930 candle formation and when we should not wait, because the trend is already set. So we just jump in right away when it's the 930 show up. And that is our theory that we try to build, the model we try to build. Let's see how it's gonna help us to better execute our trade, right? The first component, we already have it, which is a 4 breakout setup, type 1 and type 2. Now we need a second component, which is the execution. And in order to have with the execution, we need to understand a little bit deeper detail on the bias, directional bias or liquidity run right there. So you see that's different for the 930, by the way. I think we do have a write up for other case. Here the write up we have for the prior week, not this week, but the idea is pretty much the same. You see the 930, so we have to wait for the 930 to form, and we know that 930 did not really rate any liquidity because all the liquidity already rate, right? So when the 930 form, then we just mark the high and wait for the 4 breakout setup forming, and it's exactly it happened. It's the type 1 right there. So you have break, test from below, and then boom, it's gonna reverse. If we understand this direction, then we can stick through these two, candle. Otherwise, we get out because we thought that it's gonna be what? It's gonna be continue to go up, right? But if we understand the mechanism or the mechanic behind the scene, liquidity run or directional bias for the same token, right? Then we stick through this. We know that it's gonna break down. It's gonna be reversed because you see that it rate the liquidity both in the prior day, PM and London, and it create, you see right here, a double rate theory right there. 1, 2, you see that? 1, 2, called double top right there, right? Double rate or double top formation right there, and boom, you see that? It create exactly the setup of a 930. Look at the other scenario. You see right there? Exactly. the high of the 930. You see the setup right there. Break touch from above, exactly type 1 reversal. You see it rate both the PM and the London, and you see the double top right here, or the double rate right there. Rate 1, rate twice, boom, reverse. We couldn't ask for better setup than this right there. Yes, so this guy and the other guys is pretty much like a sister and sibling right there. You see that? Let's put side by side, you can see. So the idea is pretty much the same, but there are slightly different. On this case is the London is within the prior day PM range, but in this case the London is break that range into the upside. You see that? Break into the upside. That's the only detail different, but the other part is just identical. The double burst right here, also double rate right here, rate by side 1 and then twice. Same right here, 1 and twice, and we wait for the 930. You see that? Wait for the 930 formation, then mark the high of the 930 and wait for the reverse type 1 formation. Then boom, we go long and just stay in the trade until it hit the targets instead of get scary. That's one of the reason we have to understand the liquidity run. So we stay in the trade longer, and we will not get stop out early or exit the trade early when we see the it go back again our position for the first two candle right there. And this one is it happened in September 17th, so you should see the parallel right there, and this is happened on Friday. Yeah, 27. So you see the setup pretty much the same. See that? So it's almost identical. So beautiful. 17 and 27. And we made it do right here. Let's do another write up for this setup. We saw right here, right? The idea right here also. You see that? The 930? Yeah. Okay, let's make this a little bit bigger. So basically right here, we wait for the 930 to form. Because before that, there's no rate on the PM. Yes, only rate on the London. The best scenario first is wait for the rate for both. That means we have to wait for the 930 right there. We have to wait for the 930, and then we mark the high, the low of the 930, and we trade accordingly. That's so beautiful right there. Let's mark the high and the low. Okay, so the heart of the candle is 98. Exactly the round number. And the low of 930 is wow, also a round number, 5788. 88. All right, let's go with 88 right there. Yes. And you see that? So if we don't understand the mechanism, then we thought that, well, we're gonna go long. That exactly we did. We're gonna show the trade we go long here, but we learned our lesson that whenever we see a long wick for the 930 and it did rate, so wait for the one more rate right here and short them. Don't go long. Don't go long. When it rate, then you can see the setup right there. I think, yeah, mark the high of the previous day. You can see that it's break, test from below, and that is the rate right there. So the high of this candle is 94.25. 94.25. And this is the prior day, right? PM high right there. Yes. So you see that break test from above. That is type 1 right there. So it fit into our model. Rate 1 and rate twice. And then you see the reversal type 1. Type 1 show up right there at this level. Beautiful. Let's take quick screenshot and we're so right here. That's our target base time. We exit right there. Okay. So basically, yeah, we exit about 130. That's target. So it rate both. You see that? It rate both the previous day and the London low, which is a sell-side liquidity right there. And you have 8. This is the 930. Yeah, let's put a mark right there. So it's the 930. Beautiful, 930. Yep, 930, all right. So let's take the swing shot again. Hit rate and we can get out. Maybe we can get out at this or at this candle. At 1 p.m. or 1 p.m. 13:30. Right there, okay. So let's recheck this screenshot and finish up with our write up so we can understand. Beautiful setup right there. So this is our setup, but we have to put in the context of bias or liquidity run, so it helps us to stay in a trade. And we remember on this day is cuff that you see all the candle, it kept back and forth. So that's very critical for us to understand directional bias or liquidity run, so we can stay in the trade. Otherwise, we feel very frustrated because we go in, we get stopped out, and that's one of the challenge, frustrated aspect of trading. We know the direction, but we get kicked out. But this step gonna help us to have a strong conviction and stay in the trade. Okay, so we have the break right here. All right, we have a break. Yes, break, and then we have a test from above, and then you have a reverse right here, which is a type 1 reversal. You see the type 1 reversal right there. Break, touch from above, reverse. Yeah, touch. In this case, yeah, it is a down close candle, but in this case, it's up close. It should be work also, but it's gonna be more. It should be more accurate, it's more reliable. It will be high probability if this is a Dow close candle also. Just a quick note right there. Alright, let's edit this and put our write up in here. So basically, we have the first step is right here. We have the first step, it break. Alright, it break. And then second step we're gonna have is test, source it up, so it's test above. And then that is test from up, test from up. And then the third step, so number 3, which is a reverse. When we execute our trade in real time, we kind of not sure, because we thought that it's gonna break this 930 high right there, but it just read the buy side only, which is fit into our model called double rate right there. Okay, so we're gonna say for breakout 50% 9425. So it's gonna be 4 breakout at 55.97.50. Is that right? No, 57.94. 57. 94. All right, and this is a previous day PM high. That's the key level. And yeah, that's right. And it's gonna be a reversal type 1 right there. So basically you have test, is that, no, sorry, you break first, and then you test from above, and then you reverse it. Very simple right there. We try to keep it simple. And notice that, you know, 1, the condition or the context. Oh wow, I think we did have this right up somewhere. Let's see. Okay, so we see that. So we finished the write up right here. So basically, let's save this one first. All right, we just save it, right? You see that? So now we have, you know, side by side, we see that. So for this scenario, the 930 did not make any new high. You see that? It did not make any high. So it's better to wait for the 4 breakout at that level, the high. That's the reason. You see that? But not making new high. So wait for 4 breakout level. However, in this case, the opposite happened. The 930 did make a new high. It rate the new high in terms of the, you see both, right? New high in terms of previous day high right there. So it rate the previous day high, it make a new high right there. That's the bicycle rate. Then we just wait for it rate one more time, the bicycle rate, then we go short. We don't have to wait for the 4 breakout at that level. We just look at the low level below that, which is a BM right there. That's the logic. A little bit overwhelming at first, but we take it slowly, right? We take it slowly. We can understand this and execute it, make it into our daily trading. It will become our second nature. It just take practice. All right, I think we run out of time right now. So thank you for your time and interest. We always grateful for the opportunity. We do what we love, then success coming our way day by day, little by little. In every way, we're getting better and better. Thank you, and bye for now. See you later.